The three black crows is a very strong continuation formation. The perfect three black crows would be a row of red candles with gaps in between the large red real bodies. However, in reality, it is still common to see some minor overlap of the real bodies from time to time. So long as each candle strongly closes below the low and the close of the previous candle, it is rightly called a three black crows. The end result is one large drop, a huge red candle. Three black crows is often developed from three or more red spinning tops. As a result, there is often very little upper or lower wick in the entire formation. The name three black crows is quite suitable because the resulting acceleration downward is similar to crows descending from the sky. Black not only refers to the color of crows, but the color of black candles in the olden days when color charts were less common. Instead of red representing falling price, it was black candles, and that would mean the natural counterpart would be the three advancing, marching, or white soldiers, because white represented bullish rising price. As would be expected, the three marching soldiers does represent a large increase in price, and all the same points from the three black crows apply except in the context of an upward acceleration. The falling three methods also results in a large price drop similar to the three black crows. It begins with one large red candle with very little wick, similar to the spinning tops in a three black crows. After the initial downward acceleration from the first candle, the market moves more sideways and neutral to slightly upward. This often occurs with an average of three smaller real-bodied candles that are all green or a mixture of red and green. This can be considered a resting phase or a pause prior to the emergence of the last red candle, which is similar in size to the first large red candle, and this continues the existing downtrend towards lower prices. It is common and acceptable to see some slight movement of the resting phase below the low of the first candle and slightly above the high of the last candle. Though a perfect three methods falling would have the full real bodies of the resting phase candles completely contained within the real body ranges of the first and last candles. As would be expected, the counterpart to the three methods falling is the three methods rising, with the same features applying except in the reverse for an upward continuation. Remember, it's just an average of three candles within the resting phase. In some cases, there might even just be one single doji in between the two large candles, and in some cases there may be four or more candles forming the resting phase. As we will see later on with the chart example case studies, the general continuation price action here can be observed on many charts, except it can also occur on a much larger scale than just a few candles.